And in our top business story, Dubai's inflation rate in June fell from 6-year highs in the previous month, despite another large jump in housing and utility costs. According to consumer price data released by the Dubai Statistics Center, inflation fell from 4.7% year-on-year in May to 4.2% last month, with housing and utility costs, which account for almost 44% of consumer expenses, soaring 7.7% from a year earlier. Food and beverage prices, which account for 11% of the basket, rose by 1.7% on an annual basis, according to the figures. Dubai and Abu Dhabi have been ranked as the 23rd and 33rd most expensive cities to live in, according to Mercer's 2015 Cost of Living Survey. Published last week, and with the two cities having experienced a significant jump compared to 2014, Dubai soaring 44 places from last year's position at 67, and Abu Dhabi going up 35 places, 68th in 2014. According to Mercer, steep increases for expatriates' rental accommodations in both cities partly drove this rise up the list. CBRE's latest Q2 Dubai Market View report has shown that hotels in Dubai continue to be impacted by the strengthening dollar and the depreciation of the euro and the ruble. According to the global property consulting firm report, the currency values have reduced Dubai's affordability for many of its primary source markets. In May, revenue per available room fell 8.3% to 764 dirhams year-to-date compared to the same period of the previous year. The report stated that the decline was attributed to the combined effects of lower average daily rates and occupancy levels, which fell 6.9% and 1.5 percentage points respectively, according to STR Global. Although the Dubai hotel market saw performance soften during the first 5 months of the year, demand remained rather robust, with occupancies and ADR averaging 83.8% and 913 dirhams respectively. In conjunction with global economic uncertainty, average rates may face additional downward pressure from the continued delivery of hotel room supply, with Dubai currently having around 28,000 keys in various stages of development that are set to be delivered by 2018. Emirates NBD reported a net profit up to 3.3 billion dirhams for the first half of 2015, up 41% compared to the first 6 months of 2014. Emirates NBD's strong operating performance was helped by an increase in both net interest income and non-interest income, and a modest increase in costs and a lower impairment charge. Total income for the first half grew by 7% to 7.6 billion dirhams. Net interest income grew 9% to 5 billion dirhams due to growth in retail assets and the lower cost of funds. Non-interest income for the period improved by 4% to 2.57 billion dirhams, driven by increases in foreign exchange, derivatives income, and higher asset management fees, which was partially offset by lower gains from the sale of properties. During the first half, the impaired loan ratio improved to 7.4% from 7.9% at the end of 2014. The impairment charge in the first half of 2015 of 1.98 billion dirhams is 24% lower than in corresponding periods of 2014, as the cost of risk starts to normalize. Aldar Properties has revealed that it completed sales worth 1.9 billion dirhams in the first half of the year, made up largely of sales of land plots on Nareel Island of the Al Bateen area of the capital and at the Marif community in Khalifa City. The first phase of Aldar's Mira residential development in Shams, Abu Dhabi, on Reem Island has also been fully sold following its launch last month. Nareel Island was one of 3 projects with a combined value of 5 billion dirhams that Aldar launched as part of a new wave of developments in April last year. It has 143 plots of land that range between 1,000 and 5,000 square meters in size and has sold 70 of these land plots in 2 phases, raising 1 billion dirhams in the process. At Al Marif community, it has sold all 281 land plots, generating more than 600 million dirhams in sales. At Mira Shams, all 150 units on offer under the first phase were snapped up, generating 220 million dirhams in sales.